is now the time to buy Tesla stock. The stock is down 50% from its all-time highs, 41% year to date alone. So what do? Are we buying the dip here? Is the bottom in? We're going to talk about all of that in this video. We're going to go through the technical analysis. It's a messy chart. We're going to use some technical analysis on it. We're going to try to figure out where the support levels might be, the expectations for a bounce in the here and now versus just simply waiting a little bit longer. But first, make sure to pound the like button and subscribe to this channel so you can be updated of all my future live streams, plus the videos that I release throughout the week. And click the join button down below so you can become part of the YouTube membership that I have, where you get all my stock market research each and every day. But without further ado, let's go ahead and get to the charts and start analyzing this stuff for ourselves. So you have what's probably, I would consider a triple top. Is it a textbook triple top? No. But you can see it's going all the way back to November. There's three separate tops, three separate times that it's tried to break out and it can't. So you have a nice layer of resistance there, but it's also on a slight decline, which some people will say, well, that can't be a triple top then. But technical analysis is not always a textbook kind of a thing where it just follows the exact guidelines that you'll see in a textbook. Sometimes you have to use a little bit of logic and understand what is the chart trying to tell you rather than what is the textbook saying that you have to be looking for. So you have this triple top, and then you actually started to confirm it here in recent days. Now look at this. This 700 level, a lot of people thought was not going to get retested again, that the lows that were reached in February would not be retested. And yet here we are again. We tested it once in May, held it, bounced just for a day, and then it's been selling off ever since. So we're below this key support level right here, and now we've got a couple of days where it's followed through to the downside. This yellow line here that's going up, that's a moving average. That's the 5-day moving average to be exact. There's been a little bit of a propensity to every time it gets tested at that 5-day moving average to reject the price. So one of the main things that it's going to need to do going forward is to break back through that 5-day moving average to change the tune of this market that has been prevalent ever since the beginning of May. Zooming out a little bit, you're going to find that there is a major support level being tested right now with this stock. And this support level goes all the way back to March of 2021. And so far it has held quite well. It never got a real bounce off of it, but if it can hold this level in the days ahead, it provides a nice platform to bounce higher. So you have this support level, and then just like I was mentioning earlier, you have this confirmed triple top pattern as well. Which one's going to hold in the long run? But ultimately, can we see a bounce here that takes it back above the $700 level? That will be the first challenge that it takes on any kind of a bounce. And if it does, there's a huge pocket for it to be able to run without really encountering any major resistance. Maybe around 879 would be the first resistance level that it actually encounters here. So you could have some resistance that comes into play right there. But again, it's not a very good resistance level. That it's traded above and below it with relative ease. But you also have this declining trend line that has already been formed. And so I could also see a scenario where if this declining trend line is tested, there could be a rejection in price there. That would be a little bit lower than the 879, but it's a much clearer level of resistance to what I had just previously showed you. So it declines every single day. Tomorrow, it'll be at about 821. I wouldn't expect Tesla to necessarily test that unless there was a significant news event. But in the days ahead, you could definitely see a test of this declining resistance somewhere between 811 all the way down to 770. Now, what would be the worst case scenario for Tesla? And I know a lot of people are not going to like me talking about this, but guys, we should be talking about worst case scenarios. Worst case scenario for Tesla would probably be a retest of this rising trend line that goes all the way back to 2019. Yes, it sounds crazy to think we could be looking at a pullback down to 234. I'm not necessarily saying it's the guarantee that we're going to get it, but it does help to look at worst case scenarios that involve Tesla. And so that would be it. And if you think that I'm crazy for even saying that's a possibility, well, check this out. How many stocks have we seen that the froth that goes back to the 2020 March lows has been completely wiped out of individual stocks? You take Shop, for instance. You have this huge pullback. All this froth that we saw going back to March 2020 has been completely wiped out. You could say the same about stocks like Square. All of these. Now, it's not the same company, and I'm not trying to say that they are, but you've seen so much of this kind of froth, these parabolic moves that have lasted more than a year, completely get wiped out. And it's not just Square, and it's not just Shop. You got stocks like Roku, so across so many different industries. Roku's seen their price deflated. And it's not just different industries. Look at Neo. Remember this one? This was like a darling of the market. It's gone from 66 down to 14. You've got Rivian. Remember this one was like the next Tesla. It's actually never even had an uptrend yet. This thing has spent its entire existence trending lower. You got LCID. People were feeling really good about life when it was trading at or near $60 a share. Now it's trading at 17. So Tesla has actually done a pretty good job of not falling to the same fate as the others. But can we really say that it won't experience the same kind of a fate that like Shop or Roku or Square has seen or PayPal? No, we can't. It has a PE ratio of 85. You're in the midst of an economic slowdown. If we have a recession, there is a very good chance that Tesla could be trading at $200 at some point in the future. And if it does, that's great from a long-term standpoint. You can get into Tesla at a much cheaper price. But I know a lot of people who are currently long on Tesla are going to completely dismiss that. But I've also been dismissed on a lot of those stocks that I've already talking about. People are saying there's no way it could ever get that Shop could ever get that low, go from $1,700 all the way down to $324. But it did. And so there's a lot of companies out there that are losing 80 to 85% of their value off of the all-time highs. And so while I'm not necessarily saying that's guaranteed to happen in Tesla, I'm not, but we shouldn't rule out the possibility that it could happen. And here's another thing to remember. Previous bear markets, we have seen them last multiple years. 2000 and 2001, 2007 and 2008, eventually bottoming in 2009. These bear markets will last anywhere from like a year to year and a half at least. We're only about 130 plus days into this particular sell-off. And so I do think that there's a good chance that we see some kind of a bounce in the near term. But I also ultimately expect that that bounce will be sold back off and we'll see a new low formed not only in the market, but across many stocks where we thought there was no way they could get this low. But they do. Stocks like Apple, stocks like Tesla and Google and Microsoft. I do think that there's a lot more downside after we get that dead cat bounce. But let's go back to Tesla and look at this weekly chart and ask ourselves, okay, where could it eventually bottom out? We talked about the worst case scenario. We talked about the support that it's now testing. But how do you know that it's eventually found a bottom? Well, for one, what you want to do is watch to see how it responds to support. Is there a market bounce? Does Tesla also bounce off of this key support and you see a lot of buying interest that comes in strong on the stock? Then if you do, perhaps start a position on it. And if it doesn't work, then you put your stop loss below a key support level like this one here that I pointed out at. So maybe it goes down to 606 and then you get stopped out. Okay, now you step back and you wait. Okay, let's see where it might fall to next. Then maybe it goes back down to somewhere around this 549 level. Maybe there's a little bit of support there. If you see it start to bounce off of that level, you can say, okay, let's try to play this bounce here. Small position if you must, or just keep the stop loss very tight. If it breaks below that stop loss and breaks below this key support level, then you know, okay, it's not really willing to bottom at this level here. Let's stand aside and let's see how far it wants to keep dropping. Perhaps there's another support level around this area right here at about 384. Maybe there's a willingness for the stock to bounce off of this level. If it can't hold that support level, then you jump ship and you wait to see where it wants to settle in at next. And then if it fails all of these levels, you'll finally get that test of this long-term trend line that goes back to 2019. So you see how that works? You have multiple support levels that you can play here. You can play this support level. You can play the one we just talked about at 384. You can play this other support level that it's currently testing. I didn't try to play it today, but it would definitely be interesting to see if tomorrow, if the market can bounce and if Tesla can bounce, maybe there's an opportunity to try a long position there. And if it doesn't hold, then you get out of the trade. Trading is oftentimes about losing. You have to lose, but you have to lose the right way. You have to lose with tight stops. You have to manage the risk. And it's the way that you manage your losing trades that's going to define how well you do with your winning trades. If you're losing just as much or more than what you make on a winning trade, it doesn't matter how profitable you are on your winning trades. You're screwing it up by not managing the losing trades correctly. So your profitability is defined by how well you manage your losing trades. And it's okay to have a losing trade. It's okay to say, okay, let's see if this stock wants to bottom right here. It's showing signs, it's trying to base, it's trying to rally. Let's give it a shot. And if it doesn't work, then you get out of the trade, you step back and say, let's see where it wants to settle at this time. And then you can keep playing that. But you have to keep the stops tight and you have to keep the risks small. If you enjoyed this video, make sure to like and subscribe and tell me down in the comments below, what is your plans with Tesla stock? Are you going to be buying here or are you going to wait for further prices? Do you think that there's a chance that we could see the stock get down into the 200s? Tell me down in the comments below. Make sure to click the join button, like, subscribe, and God bless you all.